All right, I am now live. All right, there I am. Intraday and daily chart patterns. Yep. Uh-huh. All right. Fucking now. Let's see. No one's watching me. See if I can somehow share myself. There it is. All right, sharing stream. See if I can somehow share. Gonna quickly post this onto Instagram. Share this guy. Let's copy the link. So much going on. Don't need that. I need that. Follow link to watch. Add said link, and then on Facebook and Twitter, and post. Let's see if people show up. Link is also in my bio. Should have said bio. Accidentally said the other thing. Where is it? How do I change it? Edit your profile. Okay, that's done. Yeah, that's selectable. All right. Let's see. Who's gonna come? Who's gonna show up? Please use the live chat, so I know you're here. Like type if you're here. I won't start until there is an audience of some sort. All right, so my chat definitely works. Mm-hmm. Sweet. You can see it. I don't see you. Please type in the chat so I know at least the chat is working. So I see it on my phone. My phone's picking it up well, but I don't see any participants. So like I said, I won't start until there's at least one participant, or some people start typing in the text chat. Because I need to answer questions. So if I get questions on the live chat, then that's better feedback for you guys. Otherwise, I'm just gonna blabber for an hour, and that's not fun. Not productive for you guys. I'm sure you guys have specific questions. And make sure my audio's on. That'd be weird if I don't have audio. Stock trading, blah blah. Yeah, definitely streaming. Testing, testing. Yeah, definitely streaming. Testing, testing. Wow, that's really high. Really high pitched sound. Maybe I'll bring it closer to my mouth so you guys can hear me. But I mean, it sounds good. Oh yeah, I see. Ooh, text chat. Yeah, finally. All right. See if I can see you on the participants. Yes, I can. Awesome. Awesome. Possum. All right, so we can definitely start now that I have one participant. I'm still waiting on at least another one that I welcomed in. All the people on Instagram, I'm sure they're gonna trickle in as we go. So um, yeah, I'll just kick it off. So what we're gonna go over is first of all, here's my beautiful wife and myself, and then we're gonna go to where's that document? Chart patterns. Here we go. Here's my awesome drawings. Ah, super awesome drawings. One page, 2 pages. So we'll start off the daily chart patterns because that gives us the big picture. A lot of my strategy is based around. Ooh, man, that's too loud. A lot of my strategy is based around what Tim Grittani has taught in his DVDs. So if you look at his DVDs, a lot of this will make sense. A lot of these other chart patterns I'll show you is just based off experience, and it does change with market environment. But we'll go over it. We will go over each uh, daily chart pattern, and I'll go over the psychology behind them in terms of why they work, and then I'll go over the intraday chart patterns and kick off, which one has the highest probability and which one will I play more optimum on a specific market environment. So we'll start off with, of course, the most famous one off of Tim Sykes' strategy is the pump and dump right here. All right. So the pump and dump is probably the most well-known promotion pattern from Tim Sykes DVDs because it's so recognizable, and I actually have a watch list that I've been collecting over the past several months because I do teach people, and I need to prove to them that these patterns do repeat, and because these patterns repeat themselves, I suspect that I'll be able to convince people that exact fact, and hopefully encourage them to hop in, and so I can teach them and hopefully change their lives, and eventually refer them to Tim Sykes after they've seen some of the content that I can refer them to. So we'll go over the some of the charts, right? So say for example RATC promotion here, we have ENVV. Here's another promotion, and I'll go over the framework pattern and how it works on here. We have the SDLC, DRNG, once again, same pattern. ZPass, practically the same pattern. And just to remind you how it looks, actually, no, I'll even draw it. I'll even draw it on a paint because the awesome artist that I am likes to draw. So promotions, they'll typically look something like this. They'll struggle a little bit, then they'll start shooting up like crazy, and then they'll crash. After the crash, they'll bounce, have a small bounce, and then crash again. Maybe along the lines of in the past, it'll have a revival and it'll have a small pump and usually fails quickly because people know that the stock has been pumped. So this is one of the variations of this pattern. And to go over the framework pattern itself, we have, let me actually do some typing. Go to maybe 26 font. So we got one. One is the promotion start. And yes, I'm giving you some of the material from the framework if you want to take notes. because you don't have the framework DVD. This would be a nice time to do so. 2 is the breakout on the promotions. 3 is the parabolic move. 4 is the inevitable crash. 5 is a bounce. 6 is the potential short after the bounce. So I'll say short after bounce, or top after bounce. And then 7 is long kiss goodnight. Right, and long kiss goodnight is basically whenever the promotion is pretty much done with, like it's not coming back. So now we have that. I'll quickly draw where this lies. So here we have number 1, right? Here we have a small number 2. Up here is a number 3, and then finally we have number 4 off the morning panic, where it panics. Number 5 is down here. Number 6 is here. And then 7 is whenever it breaks this support line right there. We have number 7 for the long kiss goodnight. Ooh, that can't see that. Number 7. So this is how the framework pattern works perfectly, right? This is ideally what you want. Another thing you want to have, a slight bigger pullback. Hopefully a bounce where shorts are going to get trapped in because they're trying to short what they think is a final crash, and then it pops back up. But this is one of the clean versions of this framework pattern. So if we go through these, we continue to go through these patterns, and I'll look at the chat in a bit, but we can see that in LBI, right? I delete this and I zoom in here. You can see the number 1 is right here where the volume starts coming in. Starts uptrending, 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 parabolic move. So we have number 1, never have number 2. We do have number 3. Then it crashes on number 4, bounces around as number 5. Then we once again have, an uptrending parabolic move. This is the number 3, and with an addition of number 2, which is a breakout. And then finally we have the crash, which is number 4, the bounce that always occurs on these pumps. And now we have this uptrending, which is still a 5. And finally here, this is the top that I'm talking about, where you can short, and that also applied here. If we look, see if I can zoom into that low portion there. So here we have a very similar effect where it bounces after the number 5, and here's the number 6 up on top. So I quickly draw it here. Number 1, oh man, that is not big enough. That is no way big enough. Number 1, number 3, number 4 here, number 5 there, number 6. I doubt you guys can see this, but hey, you guys can see where my mouse is. And then once again, we have kind of like a number 3, number 2, definitely parabolic here, so that's also a 3. Number 4, number 5 is the bounce. Number 6 is the top of the bounce, and then here we have the number 7. The number 7. This is still not a number 7. Number 7 will be ideally when it breaks past this line here at the 215s, and that's when it has a technical breakdown. But then we have all the support around here, so it definitely has a lot of potential to continue bouncing since this thing isn't really panicking and is holding its gains. You can see that the overall trend for LBI is pretty much this. Right, so now it kind of looks like it has broken that trend. So we'll see. There's no guarantee. Realistically, the time that would be ideal is to check it out in the technical breakdown at 215, which is around the 2s. You also have to consider the whole number, but basically once it cracks around this thing, we can panic to the 150s, the 160s, and then it goes all the way down. This thing is still in my watch list because as the bounce here never dipped down past these drops here, this can once again squeeze back up and break out again. Will it? I don't know. I'm only curious whenever it does that, and that's when I want to buy it because it's an OTC, and I'll explain why OTCs are. So here you can pretty much see how these patterns work in terms of framework, and if you know where you are or what part of the pattern you're in, you know how to trade it. You know to be long biased or short biased. You definitely don't want to be long biased when it's going parabolic. I'm sorry. My wife's like, "Hey, put the steak in." I had to cook some steak right now in the smoker. Um, but I will take like a quick 5 minute break because I do actually have to cook that steak. Um, so here's the framework pattern is just a brief overview of it, and if you continue going through all of these, this one's more choppy, but the pattern still remains where there's a parabolic move, the crash, the bounce, the parabolic move, the crash, the bounce, the parabolic move, the crash, the bounce, and so on and so forth. And you just have to be able to identify these part of the patterns. Other times they don't ever do that and they just crash. It's just smooth uptrend and then crash. So once again, we have that beautiful smooth uptrend. We have like a quick panic. It bounces back up and it just continues going up. Um, the time to try to short it is whenever you really see it going, the volume's constantly increasing like this. This price action is what you like to see. Also, you can see that on this day it was unchanged, which means it likely consolidated at that top of that day for pretty much the whole day. It spiked up, it came down, but it looked weak, and that was the first time it actually didn't hold green the entire time. And that was a signal for all the longs to finally sell the position. IMMG, this one's a little bit uglier, but this one got halted here. It's still pump. This is really choppy, but I remember shorting MGPI. You guys can check my Instagram for that. Zeno is a beautiful, beautiful pump. This is, this should be, in the penny stock framework DVD, but you can see the parabolic move, the crash, the big bounce, the fade, and then it starts uptrending again because the promotion once again continues. We have this parabolic move all the way to the fours on the breakout, which is here is the number 2. The number 3, number 4 is a crash. The bounce is number 5. It doesn't really gap up, but it does look like it, opens unchanged here, and then it spikes, and it finally just fades the rest of the time, and now it's just been, doing whatever pumps do nowadays. Here's a similar thing where it, comes up, comes down. Here's a small breakout. It's really choppy, but the pattern still remains there, where we have the nice number, I won't say number 3, but it's still uptrends, finally crashes, bounce, and then crashes again. Also, you have to consider the market environment. If a lot of pumps are breaking out because promoters are doing well, you want to be long biased on the breakouts, on the OTC breakouts for the pumps, such as like something right here, right here. But if pumps are constantly failing, people are not going to want to hold pumps after they crash and they try to break out again. It just doesn't happen. So you have to know how pumps are working at that time. If pumps are weak, you don't trade pumps. If pumps don't have a lot of volume, you're not going to trade pumps with large size. And it's the same thing in terms of psychology of trying to trade these guys. You're not going to want to be on the opposite side of the barrel. Trying to be long biased, but when it's trying to break out, when nobody's accepting the breakout on these. I'll continue going through all these, just beautiful charts here, and I just save these because I'm nerdy when it comes to charts. And yeah, here's DVG GGD. This is kind of what a promotion would look like before it crashes. If you guys know what VGGD ever did, if it reopened on a different ticker, please let me know, because I've had this on my watch list ever since July 19, and it never crashed. I don't know what happened with this company, but this is a promotion that I never saw crash. If you need me to go over the framework pattern again, please write it in the text chat, which I'll check right now. That was just one pattern, guys. One pattern. we got this whole sheet right here that I'm gonna try to go over. So strap your seatbelts in, because it's gonna be quite a ride. Nobody's here. Where's all the participants? Oh yeah. What is the ABCD? All right. Let's not go that far ahead yet, because I will go over. I'm gonna go over all these daily charts. I do have the ABCD. I'm sure, because I sent you guys the PDF. It's right here. I will go over it. Let's just go over. No. The ABCD chart pattern is typically an intraday chart pattern. Right now we're going over daily, which is why I'm not going over it. The 1, 2, 3, 4, 5, 6, 7, the 7-step framework pattern is specifically for the huge moves of a stock. Like if we went to current stocks that are moving, right? And you know, it's not just for pumps, which is something I want to make sure you all understand. If I can find one. No, these are all pumps here. Where are all mine? Top stocks to watch. So let's look at the recent runners, right? Let's look at ALDX, you know, one of the big runners of the past time. Here we can analyze it and really go over the pattern and how the framework, the 1, 2, 3, 4, 5, 6, 7 framework pattern applies to this stock. And after this, I do have to take a quick 5-minute break because I got to put the steak in. But it doesn't have to be promotion. I mean, yes, it's pretty much the stock is promoting itself, but yeah, I'll show you. So here we go. We have the number 1 is right here, right? That big circle is number 1. The number 2 is this breakout over that high there, right? So I'm going to quickly draw a line. Whoa. Zoom out a little bit. Whoa. Zoomed in again. Whoa. All right. So if you go back to the line, so that's number 2 there, right? Obviously, it broke out past that line. Large volume, great, and it just soars. Number 3 is this parabolic move. Number 4 is this crash here. Number 5 is a bounce there. Ideally, you want it lower, closer to support, which is kind of where it's hanging out right now. And number 6 is this short onto the bounce. And number 7 is when it breaks technical support below, you know, it could be, I'd say this line here at the 550. So it has a long way to go. It has to break past this support up here, and so come all the way down, bounce around the 550s level, and then crash past the 550s. So it has a lot of support before it does that. But 1, 2, 3, 4, 5, 6, and the 7 is going to be the long kiss goodnight somewhere at the end, you know, when it's dying. The ABCD chart pattern is a little different. God, I don't even know if any of these have the ABCD chart pattern right now. I haven't looked at these stocks. Let's look at this. Okay, this is a little bit, it's a little bit choppy for me, but we'll go over it. So we have the A is a top, is the initial top of the morning. The B is the initial bottom. The C is after it breaks past the high that the stock has created after the stock has dipped. So after the lowest low, the high that it makes within the channel is say this is a breakout here, right? So that's the C, and the D is whenever it retests the high back here. So A, B, C, D. It's nowhere near the same as a 1, 2, 3, 4, 5, 6, 7. The ABCD pattern is an intraday chart, which will go over the psychology afterwards, after I put my steak in the smoker. But you have to understand the penny stock framework is how stocks move on a long-term basis, and the ABCD pattern is in the time frame of a day or like, you know, a few hours. So they're completely different. You know, these are like, and this is why I have so many different chart patterns, is because while you may see the daily chart pattern, you still need to find an entry, and to find the entry, you need to use an intraday chart pattern such as the ABCD chart pattern. You're not just gonna like see, say for example, on this day, what is that, like somewhere around here? So on this day, you're not gonna be like, oh, it's green up on the day, I'm just gonna buy randomly because I think it's gonna gap up the next day. No, you actually have to look at the chart, and that's when you bring up the chart here and you can identify, all right, so it has spiked in the morning, it dipped down, came back up, it's kind of gearing up, and then it breaks down past that high, and you can see the volume on this, around this circle, volume starts surging around this area, and the volume is equivalent to the morning volume, which is why it breaks out nicely. Now, it's an ABCD pattern because people are not trying to, you know, hold and hope that it's going to break out. But that's going to go into psychology, and I'm not going to go over that right now. But this is an intraday chart pattern, while this is the 1, 2, 3, 4, 5, 6, 7 is the the big picture chart pattern, where just showing you how the penny stocks typically function, right? And they're all the same. There's gonna be a couple variables that are gonna change. All right, so I'm gonna take a quick 5-minute break. I gotta put my steak in. Bye bye. All right, I'm back. Back for some more charts and stuff. All right, still no participants apparently. Maybe it's just not updating. Um, so yeah, that's pumps. Let's clear all this stuff and continue going with the different chart patterns. So here's this is a very nice pattern or a very nice chart. Just kind of depicts how promotions are. Please annotate this and watch the penny stock and framework DVD because it really goes over more of the psychology. But you have to study. You know, this is just supplemental material. This is not the actual material itself. All right, let me. My throat's getting dry. Let me drink. Swig out my beer. All right. Let's see. LDX. What's next on the list? All right, major daily breakout. This is relatively easy. Here's a version of a major daily breakout. It's easily identifiable. Very easily identifiable. All you have to look for is hot percent gainers or top hot percent gainers, top percent gainers every day. That's what you scan for, right? Say for example, this stock here. This stock was, aside from that day, this stock was a top percent gainer. Yes, it's red on the day. Therefore, most people would just not put this on their watch list, right? That's typical for a lot of newbies. They see something that gaps and it almost looks like it craps, and they say, you know, this thing's just going to continue failing. No, that's not true. First of all, you have to look at the news. You have to see if the news actually looks like it has potential to create a lot more hype. Because a lot of these spikes is just due to the pre-market buying and you know pushing the price up because of the low volume. So whenever something spikes like this, you want to instantly put on your watch list because it has outstanding volume, right? It has record. Aside from that day, it has record volume from the entire year. You know, probably of all time. If I can zoom in properly. Yeah, like pretty much all-time high, like 3-year record volume. Um, and whenever something shows volume like that, you know it's gonna be in play, and that's something you definitely want to have your watch list. So don't make the mistake of, seeing one of these charts and seeing like, oh, gaps up, it's a big red candle. No, it's still green on the day. It's still gapped up from 420 and it's still holding at the 560s. So it's up 25%. Now, once you have this on your watch list, you continue to let it develop itself as a chart. And you see the next day, it's holding in the middle. It has, I forget what candle that is, but it's not continued to sell off. And then the next day we have this major daily breakout over this high here, right there. Now, the reason why this is so effective is first of all volume. You have to pay attention to volume on these breakouts. Volume on the breakout day needs to be equivalent or larger than the volume of the day that it's breaking over that high. So you can see the volume here on this day was about 11 million shares in volume. And on this day, it was 10 million shares of volume. Yes, it's not the exact same, but it's not an exact science. You just need to find that people are willing to buy. And of course, this is in hindsight. It has 10 million share volume at the end, when it's already gone up to 11 million. But when the stock had opened, it's already trading, say, like 1 million shares the first 30 minutes, it's going to be a big day. And this is just one of the versions of a major daily breakout. Now, what differentiates a major daily breakout versus something that isn't a major daily breakout? Well, say, for example, this is a major daily breakout because it has a spike day, 1 day of consolidation, right? You need that consolidation period. And the second day it breaks out. This also can be seen in Tim Grittani's Trading Tickers DVD. What doesn't constitute a breakout is something like something like this. All right, this is not a major daily breakout. It has a spike. Yes, it kind of consolidates sideways, but you see it has created another high. This is just, I would consider another, overextension. There's no really 1 day of consolidation. I mean, you can kind of justify that is, so that's probably a bad example. Let's look at something like that. Right? There is no consolidation around here from this period to that period. It just went straight up past that breakout right there. Okay, so just the big difference is you have that period of consolidation. You have large volume. Ideally, the breakouts that you want to buy are stocks that are in play. If a stock is trading record volume, everyone's going to be watching it because it's going to pop up on everyone's scanners, everyone's watch list, and people are going to hold it and they're going to remember it, and they're going to try to see how they can enter it the following days. Versus something that, say like right here, where it's not really trading record volume, but say right here, this breakout where it breaks out past that. You can see all the other volume bars throughout the course of history. That's not record. You need to see like massive volume, and that will guarantee you that you have a large audience that's paying attention to that stock. And if the stock has fundamentally good news, like say a press release that's gonna create a lot of hype, and you have the technical indicator of a major daily breakout, you have a recipe for success, right? Ideally, you want the float also to not be too large, and you also want to have a good entry in terms of the intraday chart pattern. That's major daily breakout. I'm watching the chat for you guys that want to type questions. So gap fill and bounce play, one of my favorite type of patterns, especially on low float stocks. If I can find one. Here we go. So this is a gap fill / bounce play, right? Whenever something crashes like this, Tim Sykes hates this pattern, but only because he hates a pattern doesn't mean it's wrong. Yes, it's going to have bad odds because not a lot of people are paying attention to that, since he's one of the major teachers of this niche. But if you know what to look for, you can profit off of this pattern. The things you want to see in this pattern are low floats, good news, ideally earnings winners, so something that that can make it runs for several days, and also large volume. So the things that you want to find is, of course, a breakout level. That's the one thing you want to see. Say, for example, right here, this here did not have great volume. It broke out past this, and you can see this gap fill ideally that it can fill. It went from the 180s to the 2. Woo, yeah, that's great, right? The next day, it gapped up, which is expected of a breakout. It spiked up to the 211s and came back down. Now, the long term was a little bit nicer, but that obviously didn't work. So now we're going to the next gap fill. Here it had a double top, clear double top, and then it just faded the entire time. Now when we come back up here where it's coming for this, we still have this gap to fill from the 250s to the 4s. How do I determine that? Well, we go over to the past and we see now it's not to the 4s. Now we can see there was pretty much support around the 320s. And you're buying at the 320, or because there's so many bag holders from the 320s, and especially, you know, up here at the 4s because of the large volume around this time. And of course, this time, large volume because you have to pay attention to volume. And even around this, there's, you know, perk in volume here. This area and also this area will be all resistance. So sure enough, you know, you can see that it pretty much had trouble around the 4s to the 320s. But the breakout happened from 240 all the way up to 280. That's about 40 cents a share of potential reward. Obviously, this stock has good range. Range can be determined by how much it has moved in the past with good volume. And because it has good range, that's something you want to trade because you know that it doesn't have much resistance aside from the bag holders. The closer it gets to these resistance points, the more enticed all these bag holders will be to sell. So ideally, you want the gap to be even bigger so that there's more room for the stock to breathe. But you're not holding this to try to make a home run. You're buying this, trying to make your 10, 15, 20%, and you're done. That's how this pattern works. Now, there has been cases where I've seen gap fillers go up 100, 200, 300%. DRYS was dry shipping, the shipping stock during the shipping sector that was a $4 stock, filled the gap from like 4 to like 20, and then it continued all the way to 120. So of course, you know, there's exceptions to the rules, but that's not the predictable part of the move, which is why you don't gamble on that. If it's not predictable, it's not worth betting on, so you don't trade it. You trade what you know is going to happen or what's likely going to happen. So that's gap fill. Type something if you guys are still watching, please. I don't want to talk to myself the entire night. All right. Gap fill, supernova. Supernova is pretty easy. I mean, you guys can really look at the DVDs for this. But ALDX is a perfect example in terms of this chart. Yes, if you look at everything else, it doesn't look so great. But right here, massive, massive volume, all-time record volume, right? And it goes from the 4s all the way to the 12s, 300% gain in a matter of a few days. This is considered a supernova. FANG is not necessarily supernova because it hasn't gone crazy. It went from the 280s to the 6s, almost 200% return, but it's not, you know, soaring through the prices like there's nothing there. One thing you can call mini supernova is something like 1. Nah, that's not even it. We're talking about supernovas. Let's see if I can see AQXP. AQXP. This is a classic example of a supernova, right? It goes from 180s all the way to the 55s. That is a supernova, and if you look at the chart pattern, you can still trade it like the penny stock framework. You just have to be quicker because it's in a smaller time frame. Still watching. All right. Let's see. Yeah, I know it's delayed. Yeah, I know it's delayed because it has to get to me first. I have to read it, then I respond, and you know that latency definitely can be seen. All right. Gap fade and push. Oh, well, we just went over that. The gap fade and push was another example of a breakout, but it was also the good example of. Jesus, where did it go? LDX. LDX is a great example of a gap fade and push. So here we have the gap up, the fade. It fades for 2 days, and the next day gaps up and pushes through it and breaks out. right? That is what this guy here is. You can see it just going sideways, and all of a sudden gaps up, curls down, then it starts coming back up and it pushes up. And if you guys look at the Instagram, you guys have seen multiple instances where I've either tracked this exact chart pattern or where I've traded it. And whenever you trade this thing, you definitely want to buy it because the psychology behind this is that traders are buying around here, there's bag holders. But when it comes back up, of course, it's going to be selling pressure because the bag holders are buying at the top. But when it breaks out, it's confirming to traders that this thing can continue to set new highs, especially when something has faded, right? All this selling pressure doesn't matter basically whenever it comes back up and it can break past that resistance point. And that's why it's such an effective pattern. Not only that, but because, say, for example, right here, it went from 730s all the way down to the 55. So if you guys understand short sell restriction, this stock has gone under short sell restriction on this day, which means the short sell restriction will affect it for the following day. On this day, it went, it had an intraday move from the 630s down to the 6. All right, so this day was not short sell restriction, but it definitely makes it harder for shorts to enter the positions here. And because of that, that causes the inevitable move for it to push back up like this. And this is something I look also in the supernova plays, and I'll explain that as we go through the charts. But this is a good chart, and as you can see, it's a very powerful chart pattern if you can identify it and if you can be in for the breakout. Sweet. He's watching. If you have any questions, like I said, ask them away. I'm here. I'm here for you guys, not for me. All right. Buy on rumor, sell on news. News. Why did I put 2 news? Oh, that's right. So this is basically an uptrending movement based on rumor and then on the news itself. This typically happens with FDA approvals, which they never get approved usually, or cannabis plays. And that's the best one that I could think of. CANN. Here we go. Wow, this is typical chart pattern too. So, yeah, right around here. Typical buy on rumor. Oh, I gotta take a break. My steak's ready. Be right back. I'm back. Don't worry, you have not been forgotten. All right. So when looking at these, how do you know this pattern will occur? Um, so it's not necessarily about predicting the pattern. It's about reacting to it. I don't know it's going to happen, which is why I keep it on the watch list. Uh, Say for example, right? Let's look at this one, right? If I see something around here, you know, say when it goes from 120 to 146, I mean, it's not a top percent gainer there, but say, you know, on a move somewhere around here where it somehow pops on my scanners, whether it is a high day scanner or something like that, and I see it going over towards highs, I add it to my watch list. I don't care if it does it or not. I only care if it actually does, if that makes any sense. I react to it. I don't try to predict it. That's why you hear me say a lot of times, I hope it goes to this key level. Not necessarily that I'm in it and I hope that it goes into it because I want to make a gain, but because that I want it to go to a specific level so I can react to that price action. Um, and the risk to reward we'll go into that once we look at the intraday, which we're already halfway through the daily charts, and now that you guys are seeing these patterns more, I can quickly race through them. Um, but say for example the ALDX, how do I know this pattern is going to occur? Like I said, I don't know if this pattern is going to occur. When I see this, I don't know what it's going to do. It can continue failing if I want, but because it's a top percent gainer and because I see the massive volume, I'm interested. Oh my god, my steak is ready again. Serious? I'll finish real fast. But so because of the top percent gain, I'll keep it on my watch list. I don't know what it will do. Sorry, the thing's beeping and my wife's not like it's beeping. Um, but because it's faded and because now it's holding on this day at least it's holding, I'm now interested in it. I want to see if it will continue going red or if it'll start gapping up, right? If we look at this chart pattern here, this is like I said, once we go to the intraday chart, we'll start seeing what it's doing, right? So here we have this, it goes up and it just fades all day long. Then it starts gapping up and then it just kind of holds its gains all day. That's why I'm interested because it has potential to gap up. Now I want to see if it wants to gap up again. And we see the next time, now we have a gap up. And because it's gapping up and it's in my watch list, I know that it's approaching the breakout level. So now I'm very interested and I keep it on the hot stocks to watch, just like this watch list right here. You got personal top stocks to watch, hot stocks to watch. Top stocks to watch. So now you know, these are going to be one of the few stocks, maybe one or two, three stocks that I'm be watching on the day. And finally, when it starts gearing closer and closer to the breakout level, right? And it finally has a squeeze here with large volume, I'll be interested. I won't chase. I'll wait for the dip right around here where it hits support or gets close to support. That's when I'll enter either the 740s or the 750s around this consolidation area, especially because the volume is fading. The volume fading just means, hey, people are not as interested in selling, right? The selling volume is not as big, and that's one of the ways I check out this pattern. But really, I can figure that out just off the daily pattern. So I'll be right back. The steak is ready this time for sure. So I'll be right back. All right. Oh man, on my way out, I just destroyed everything in my room. So, jeez. Let's get my mouse back. Somehow I got tangled in everything. That's awesome. Come on, Mr. Mouse. All right. The mouse is working. I thought I broke it. Let's see other questions. Take your time. Have an assignment due in 20 minutes. So, I don't get it. You're doing an assignment right now, and it's due in 20 minutes, and you're watching this? I will. I'm gonna keep going. We do have a lot to go to, and like I said, it's gonna be recorded. So if you do need to take your time, then you can re-watch this portion of the video afterwards. All right. So yeah, like I said, I don't know. I don't anticipate. I put it on my watch list and I hope for the best. I'm optimistic in terms of the chart pattern, whether it's crashing or whether it's gonna break out. I don't care. All I want is for it to do one of the patterns that I recognize, and that is off of this here. If it does any of these patterns, that's what I'm going long in. Another thing that is nice about the intraday is you should be able to read these trends, right? So obviously you can see that this thing is trending, right? It's obviously trending upwards, right? In addition to that, you also have this symmetrical triangle on the beginning of the day, right? And then it breaks out with large volume at the climax of that triangle. That is a clear buy signal if you wanted to buy before the breakout. Now, what if the breakout failed? Then you probably break even because it's going to retrace quickly, considering the volatility here. But if you buy on the breakout here, or the breakout hold, your risk is about 10 cents versus here it'd be 20, 30 cents, and now you are really holding for the rest of the run. That's just how that is. Another thing that is, no, that doesn't really work there. Another type of pattern is a gearing action that is this here, right? We can see a ascending triangle here. Just clear ascending triangle, and then once again at the climax you see that Birkin volume. These are just entries, and after a while of seeing these intraday charts, you'll be able to understand them a little bit better. Let's see. Good. I'm glad you're learning. Like I said, this video will be on and on, so you guys can watch this all the time. It's gonna be a long video. So what I'll do is I'll break it into chapters in terms of like what chart patterns there are, and then you guys can click on the link on the description, and it'll take you to that exact pattern. All right. How do you apply risk reward? Risk reward, like I said, it goes over to. We'll do that intraday. But one thing for sure I can say about risk reward in terms of the daily, since we're on the daily right now, is what Tim Grittani has talked about in his DVDs, right? So ideally, you want to buy as close as possible to the breakout, because breakouts are typically very, very strong support and resistance, right? Because that's what you see in the overall picture. So you buying it up here at the 9s, right? Say there's an intraday chart pattern that develops around the 9. Say it's an ABCD breakout chart pattern that develops around the 9. Your risk is really down to the 725s, because that's where it can really panic down to before it hits some type of support and bounces off that, regardless of what the intraday chart pattern is. So that's why whenever you're chasing a stock, you want to really consider your position size. That way you're not opening up yourself to too much risk. Ideally, you want to buy as close as possible to these breakout levels, somewhere around here, so you can really guarantee, all right, if it breaks down past this breakout, it's definitely done, right? If you're buying up here and say the intraday chart fails and you still want to be in the chart because you somehow convince yourself, this thing might continue to go up, you're gonna start, convincing yourself, well, maybe this support level will hold, maybe this will support level will hold. When in reality, if you're buying by the support level, you know for a fact if this support level right here on the breakout does not hold, you are out. It is a confirmation breakout, fake out. And of course, there's those occasions every now and then that it really fakes you out, and that's perfectly fine. But more odds than not, you will make money because the breakout is such a strong catalyst. Just in itself, the breakout is a strong catalyst with good volume, of course. Shitty volume is almost guaranteed that it's gonna fail, especially if it tries to break out midday. So don't chase. If you are gonna chase, make sure first of all the intraday chart pattern is clean. It is it's posing good volume, and also you understand your risk. Because if you are getting in blindly because like you think the intraday chart pattern means everything, good luck. So definitely try to buy around breakouts. If you miss it, whoop de fucking do. Wait for the next chart pattern, because these things are never going away. All right. Yeah, buy on rumor, sell on news. Oh, buy on rumor, sell on news. CNET. No, not CNET. Oh, check this out. Here's another example of that one that I was talking about, where it is the gap, fade, and push. We got the fading action, fading volume here, right? Volume is really getting bad, which means any big buyer can really push it up. Then it gaps up. As soon as it gaps up, it's in my top stocks to watch. Then the next day it gaps up again, definitely on my top stocks to watch, and I'm watching this like a hawk. And once it starts getting next to that breakout level, hey, if the intraday chart pattern is right, I'm going to get in. If there is no good intraday chart pattern, say if it's just like soaring right through that breakout, I'm not going to buy because I'm not going to chase on strength. So that gap and push, very, very, very solid pattern when it does happen. Doesn't happen too often. Buy on rumor, sell on news. See CNAB. That's the one I was looking at. CNAB. Apparently hasn't been moving a lot. So, but here's another example. Here's a good example. So this is the cannabis stocks, right? United Cannabis Corp. So it's uptrending the entire time, follows the same, pump and dump type pattern. And this is in anticipation to the news that a bunch of states were going to legalize cannabis in the United States. And it's moving up, moving up, moving up. And of course, the inauguration and the entire election happened on November. Right as soon as the news came out about all these states legalizing their cannabis, it tanked. Why? Because it was already priced in. All this move, all the investors have been anticipating it. They all bought, so they took the profits as soon as it came in. That's something dangerous you don't want to be stuck in. Same thing with pharmaceutical plays. Let's see if I remember which one of these was a buy on rumor, sell news. Similar to this. I don't know what the news is here. If we look at the news, we see, what is this? Pharmaceuticals, yeah. Outperform for market. What happened over here? 815s. Narrow than estimated Q3 revenue improves. Fiscal third quarter results. So it's an earnings winner from there. So ever since the earnings winner has been moving up. Nothing really there that I can notice. I'm not going to go through all these news, but say they release phase 3 results, right? And if you look at the DVDs, you know that after phase 3, typically the decision for FDA approval can happen within 6 months if it's expedited, or like 10 months if it's 10 or 12 months. I can't remember the exact numbers right now because I don't play them. I don't play FDA news. I'm not a swing trader. But if you know this, you can buy on the rumor and then sell before the news. Same thing with earnings. If there is anticipated earnings, like say they release a press release where it says we are going to release earnings on this day, that is a rumor, right? It is pretty much a confirmed rumor because the company is saying it, but it's a rumor because likely what's going to happen is on the message boards, all these people are going to start talking about it. And because they're talking about it, this is going to have other people and be like, oh, wow, the stock is going to report earnings. Maybe it's going to be great earnings because everyone's excited about it. So they're going to keep buying, keep buying. The stock price raises, raises, raises. And throughout this entire time, the earnings are unknown, and it basically has been priced in. So imagine, like right here, they release earnings. And then on this spike here on 824, if there even is news, I don't even know if there's news here. No news, right? But all right here. Present at the 2017 Contour Fitzgerald Global Healthcare Conference in 9/11. Right there. Ugh. Wow, that was terrible. That's a terrible example. But imagine it's earnings and it's uptrending on earnings, and then right before earnings it tanks, or right on earning it tanks because they have shitty earnings and everyone has been buying a stock that is absolute shit. So that is where you don't want to be stuck on in terms of trying to buy the news when you see it has been uptrending the entire time before this news has came in. And that's something you have to be aware. Why is it uptrending? Because people, insiders maybe know, or people are spreading the rumor. Find the rumor. If there's a rumor, don't buy it unless you're the first one in, or unless you know the rumor is not coming out until a few days more. So that's buying rumor, sell news. Do I recommend paper trading? I do recommend paper trading for those of you who don't have any money to trade. However, I of course recommend real trading over paper trading because you actually get the full education out of it. However, if you cannot afford the full education because you were a broke guy like I was when I first started, then do paper trading because that will at least teach you how to do the chart patterns. But do not expect the paper trade results to be the same thing that you will have once you start live trading. So once you start live trading, trade with very small size. That way you are not risking a lot of money that cannot be made up again, and you're not freaking out every time you're losing 20 bucks. 20 bucks, 10 bucks is affordable. 100 bucks, 200 bucks, $700, $1,000 when you're first starting, unless you're you were raised with the silver spoon, that's a lot of money for most people. So you gotta be all right, man. See you later, man. It's gonna be just like you said, it's gonna be here. You can watch it later, and I will go through everything. So thank you for watching. What was the question? Paper trading. So yeah, I do recommend paper trading. However, if you can, do real trade and just go small size. Don't be worried about how much you lose. Trade and trade and trade. No, I'm talking to fonts. She doesn't understand the life of, of an armorer. That's funny. Yeah, you're doing all the I would assume you're doing all the WTI Marines. Yeah. I can't believe you're still awake. Anyway, have a good night. Yeah, Karina, he's a Marine, so he's an armorer. He issues out weapons, and he has to be awake so that he can issue out weapons to everybody that needs them. So yeah, that's his life. But he's still here. He's still learning. So that's why I love that guy. Yeah, I hope you guys understand the rumor thing, and also for the paper trading. Of course, paper trade to practice the concept of entries and exits, but once you put real money into it and you add emotion to your trades, it is a whole completely different ballgame. So definitely consider that. All right, Foos 4 breakout, gold breakout. It's hard to explain. There's no example here, so I will just draw this thing. We're almost done with the daily breakout, or daily breakouts, and we go to the other ones, the intraday, the one that everyone always has trouble with. So Foos 4 is something that has been dying, right? A long-term chart. This is a daily chart. The daily chart has been dying, and all of a sudden it perks up, right? Large volume, okay? Perks up, and it just starts fading. But as it's fading, it holds a higher low, right? So here's low, higher low. Then it starts uptrending again, and then it breaks out past that high. Ideally, you don't want to retrace this big, but the fact that it holds a higher low means that the stock is now reversing, and this is pretty much a powerful breakout, unless you're chasing it, unless this is like the ones and this is the threes, and it retraces from the ones to threes and breaks out. I don't know how well that's gonna work. It better have some like exceptional volume around here. But when it does come up, that's kind of nice. And of course, a breakout, that's just a breakout pattern that I've taught you already. But the other pattern is whenever it's fading, it's fading, it's fading, it's fading, and it stops. And it comes up and it perks, but it stops at the $1 resistance. Then it comes down, it fades, and it holds a higher low, right? Holds a higher low. Then it starts coming back up and it breaks out. This is a very, very strong breakout because not only is it a major daily breakout, but also it's breaking that $1 huge mental number. And that's going to cause this to light up on everybody's radar and everyone's going to get long on it. So there's this pattern. This is called the Foods 4 breakout. This is on the Foods 4 DVDs if you have the time and money to buy that. Next. Breakout confirmation. Breakout confirmation is after this breakout, it comes down and retests that breakout level. OTC major daily breakout. It is the same thing as any other breakout, except OTCs they act differently versus listed stocks, and that's because the OTC stocks, they either go up or they go down, and you will not have any doubt of what direction it's going in because it's extremely obvious in terms of where it goes. And OTC breakouts are extremely powerful with good volume, so you have to look for OTC breakouts that have large volume. First green day. How do I, and I'll answer a question in this example. How do I know when a pattern is gonna work, right? The way I know the pattern is gonna work is when something is overextended, especially for the first red day, because that's where we're going off. Not yet. First green day. Where am I missing? Far right. There it is. First red day. That's what I want. So how do I know this thing is gonna occur? Is because it always happens. This is once again on an inevitable chart pattern. Because this is now overextended, it has gone from the 1s to the 250s, 260s, it's gonna eventually have a retrace because longs are gonna sell at some point. They're going to take profits. So when I see a chart pattern like this and I'm not in it, I'm looking for the first entry. In this case, a short position. If it gaps up another day and it goes towards the 3, cool. If it doesn't and it just kind of, goes red on the day, cool, I'll try shorting it. This will go red at some point, and when it goes red, I'll either try to short, or if it crashes hard enough, I'll buy the bounce. So let's find an example, ALDX, right? Here's an example. It shoots up, right? Zoom in better. It shoots up and finally has that red day. This is what a red day is. And if we look at the 5-minute chart, once again, goes spikes up and then crashes the entire day. This is where I want to get a short, ideally on a large bounce. Somewhere like bounce here and then add on something like this. That's what I want to do, and if it doesn't do that, well, oh well. But more often than not, I'll try to get short on this, and if I see a bounce pattern coming up, I'll try to buy the bounce. Now in regards to bounce, that is a first green day. I look for a first green day. First green day is whenever it spikes past the previous close. This is an example of a first green day. However, look at the volume. The volume needs to be strong on these patterns. Anything that you do in trading needs to have good volume. Otherwise, you will get stuck in illiquid stocks and the chart pattern won't work. So in here, when it's a first green day, because here's a close at about 890s, and then the next day close is around the 9s. However, because of the terrible volume, it just panicked the next day. There could be some news that caused that also, but this is what happens when you have crappy volume. A good example of first red day with a bounce is something like this, right? We have the nice breakout, so large volume. It goes up, has a first red day, right? Goes negative on that day. The next day, it has a first green day. And typically with this chart pattern, with good enough volume, it will gap up. Here we have it closed at 440s. The next day it opened at 460. So 20-cent gap up. That's about a 5% overnight. About 2.5% overnight gain. The volume wasn't terrible. The volume wasn't great, but it was good enough. So that's the first green day. Very good catalyst. It's an easy trade, especially for overnight swinging. You just have to understand your risk. And I'll go over risk. Overextended chart runner, like I said, it is something like this, where it is just spiking past. The farther it goes, the better. Just understand that you don't want to chase a move like this. You want to buy it somewhere around the breakout. and you definitely don't want to chase, you know, the second or the third day after it's gone green for 3 days. Overextended red to green, perfect example is something like this, where it had up here, it was positive on the day, but then it went negative on the same day. And that is a huge momentum shift. That's something I want to short. Definitely want to short, because then I can get a good entry, and also I'm going to have a nice panic the next day. Right here, the 420s, it panicked all the way down to the 410s. About 20-cent reward there. That's a 5-cent reward from yesterday's close, from this day's close all the way to this day low. So good pattern. Symmetrical triangle. Here's another pattern, and we actually have an example here. Fang is a great pattern or a great example of a symmetrical triangle. We have the trend lines, and I'll draw it here. Perfect trend line around the climax. We have a huge certain volume, and it breaks out. Once again, volume is extremely important in these stocks. What? What? Okay. All right, and that finishes the daily charts that I trade. I really don't trade any other charts. If I do, oh, I actually missed a couple of them here. Earnings winner breakout. It's a breakout, but it's an earnings winner. It has potential to continue moving. You can see this, and it continues moving up. Buy on Ruby Saw News. I went over that. The major daily double top. I forget which one this is, but something like this, right? You can see the volume was not as good as the previous day, and so it didn't break out. But this is a major daily double top. This is something shorts we'd like to get into, especially if the volume isn't convincing, or there's a press release that is pretty much just bullshit. Ideally, for the major daily double top, you want to see a large move. It's fading, and it continues fading downwards, and then it perks, and then you could short on that double top. What you don't want to short into is something like this, where it comes down, pops up, and it makes a higher high. You do not want to sell on short sell on the double top. That's a bullish pattern, because the trend is going up. So you gotta look at the trend, the overall trend of the chart, and this is why the former runner pattern works so well. If I could find one of these patterns where it looks like this. Huh. Wish I had this on me. Nope. 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 Yeah, something like this. This is not a pattern you want to buy. So you can see the entire time it's spiking, fades, spiking, fades, spiking, fades, spiking, fades, spikes, 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 and it always fades. It always cannot hold its gains. This is what a former runner is, right? A lot of these former runners will do the same thing. DRYS looks the same. Oh, look at this. That's just ugly. Oh my lord. I haven't seen that chart in a while. Tops is another one. I think Tops is a little bit cleaner. There we go. This is not something you want to buy thinking that it's going to break out past the previous high, because it never will. And yes, it's 7,000, but that's because this is a terrible company that can continue to do reverse splits. But this is not a pattern you want to buy, because the trend is downtrending. Downtrending, right? So consider that whenever you try to buy these things. Yes, you can basically scalp the move, but is it really worth it? No. Find better setups. ITIS. Yeah. Yeah, something like this. So this chart pattern, and this is a great example. This is a chart pattern that yes, it has amazing volume, but I still would not trade in the front side of the move, because it fits that parameter of a type of thing that I would rather short, right? I would say, especially because it's fading volume, right? The volume's fading throughout time. Especially if we look at this chart pattern, you can see that the volume has faded. If we draw a trend line throughout this, that's pretty much the trend line of the volume. It's still going up, but it's weakening as it's going up. And you consider that, as well as there is resistance. Let's look at the volume before. We got resistance there. It broke out past that, which is why yesterday I was looking at it. I remember I was telling I was talking to one of my friends that I was talking to, where it held above the breakout there. I wanted to go long, but it didn't really. It kept faking out here, which is something I don't like. So, and that's because of the shitty volume. But another thing is this top right here. Right? Obvious top, not great resistance or great volume there. Everything else is kind of choppy. There's more resistance up here, ish. So if it continues breaking past the twos, great. It can go to the threes. But I mean, are you willing to bet on that and buy on the third day? No. What I'd rather do is I'd rather wait for a short sale on the first red day, or short sale on. So here we go. The short sale on the first red day, a dip buy on the first green day, right? Or a short on the bounce of the green day. That's what I do. I like doing the backside of the move because it's more predictable. Here, I don't know how far it's going to go. Once it does the backside of the move, I know how far it can go because there is established resistance and support, and that's what I'm waiting for. So I know I would not buy this. But yes, this is another pattern that has never held its gains. However, this is now making higher highs. If it can dip and hold again for a higher low around the 150s, 125s, which is over this breakout level, and consolidates around that for about a week and then start uptrending again. So once again, it comes down. It's like spiking, 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 spiking. It comes down, and it spikes, comes down. This might be the same thing as these previous spikes, but if it spikes, 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 comes down, and spikes, comes down and holds and consolidates and start uptrending again, instant watch because I'm looking for that breakout. If it breaks out on large volume, I'm very happy, and that's the chart pattern I'll trade. Even if it has an ugly trending chart. I won't hold it hoping for a home run. I'll probably take 7-10% gain, maybe 15 at most. All right. Other question you had? But to dip first red day? Yes. Yes. Dip first, it does sound sketchy as hell. I do understand that, and that's why a lot of people are afraid. But the dip buying the first red day is very similar to dip buying pump and dumps that panic, and EMVV is a good example. Right? Yes, you can also buy in the first green day, the actual first green day, but you can also dip by the first red day, as long as it does actually panic. So let's see if I can go back here. 724. I'll go back in time here real fast. Go. 724. July 24. There we go. So I want to see panic like this, where it's just like falling off a cliff. If it's kind of consolidating down or it's kind of slowly falling, I don't want to get in something like that. The potential for dip buy is not as strong. However, when something is crashing like this, especially when it's making higher highs here, you see this? Sorry, not higher highs, higher lows. It's making almost this symmetrical triangle, right? And it already had the first fake out, so it took out all the weak hands there. And now it's consolidating sideways. I'm interested in a dip buy because look at these panics. These panics allow short sellers to take profits, and when they take profits, they create this buying pressure. And when they create this buying pressure, other people are also going to, follow that buying pressure. And if they follow that buying pressure, more people, and then the crowd continues. And if it's liquid, more people are watching it, and it's really interesting. But when something is uptrending like this, this is indicating a bounce, especially because right now we're around the 7:30s, 8 o'clock time. So if we go further in time, we likely will see a good bounce. Now, weak bounce. Very weak bounce. But hey, these are one of the exceptions. But still, from the lows, from 28 to 36, it's pretty good 20% gain. But it's not something I would like where it bounces maybe up to the 40s or something. But that pattern still exists where the only time you dip by the first red day is when there's sheer panic, and ideally you want to dip by around support. Dip by around support. That is the important thing. And really the only time I buy first red days is whenever there is a panic. I won't buy it ever on anything other than a pump, and a first red day on like a supernova where it is crashing, unless it is panicking. I don't want a gradual crash. I want a panic. where a huge momentum shift is quite obvious. All right. The moment you've been waiting for. Oh man, seriously, the moment you've been waiting for. Hey, ooh, where did this come from? All right, awesome. This is perfect. I was gonna go over ABCD pattern. Here we have an ABCD chart pattern. That's great. And imagine that. This is on the biggest gainer of the day. Whew. 1,200. Oh my God, 12,000%. Jesus Christ. What a mover. Now I wouldn't short this because it is pennies, super pennies. So the collateral for this would be ridiculous. So this, and especially because this is an OTC, we can probably see a couple more days of this. That'd be awesome. I like just watching these type of things because it reminds me why I like this job so much. Sorry, I'm hiccuping from the. All right. Anyway, so here we have the perfect example of an ABCD chart pattern. Not really, but it's close enough. All right. So what I'll do is I will export it into something. Take a screenshot. Because I need to scribble on it. That's what I need to do. So many documents here. Is it considered a pump? Yeah. I mean, we can find out by going to stock promotions. I wouldn't say it's a pump. I really don't care because I'm likely not going to trade it unless it was alongside. And because it's an OTC, I'm pretty sure it'll go up as long as I buy on a breakout. But I'm not really going to trade it. But let's see. This is not the. What am I doing? Stockpromoters.com. Let's find out. All right, let's find out. Stock promotions today. ALRT. Is it being pumped? Come on. No, not there. Oh, here we go. Compensation 10,000. That was back in 2014. Wow, that was a while ago. So is it being pumped after these records? I'm not sure. Is it likely being pumped? Yeah, it's an OTC. They're susceptible to pumps. I don't know. It looks like a pump. Smells like a pump. It's probably a pump. I've seen something like this. Was it KBSF? Yeah. Very similar type of price action here, where from 20s all the way to 4s. Out of nowhere. No great volume either because it's an OTC stock. The next day, continues going up because it's an OTC stock. Next day, went all the way up to the 18s and then crashed. And then next day, guess what happens? It crashes again because this is a short pattern. Hold overnight for the second day because it has odds of 80%. And then first green day, guess what happens the next day? Gap and spike. Oh, the penny stock framework pattern. Even though it was several months ago, here's another example of a former runner and why you don't ever buy it because his odds are shit. Yeah, I've seen this pattern before. I'm not surprised by any means that, or by any chance that this is going to continue going up. I actually pretty much guarantee it will go up because the volume is insane. But it's not my pattern. I'm not going to trade the front side of the move, so I don't care. The price range I trade is anything from 50 cents to about $9. $10 I get out of my comfort zone. $11, $12, that's when I start shorting because I don't want to buy that high. That's just how it's, yeah, so about 50 cents to $9. I have a very big spectrum of potential plays. If it fits my pattern, I will trade it. And I'm not biased. Maybe I should find the stats on that, kind of like Tim Sykes knows. But, I mean, if it fits my pattern, I'll trade it. Doesn't matter what price stock it is except if it's in pennies like this. Anyway, back to the intraday chart. So here we go. Nice ABC chart pattern. I'm going to bring it out from the desktop. Here we go. Okay, let me squiggle on this. All right. Oh man. How do I go back? Cool. Very cool. Okay, so we have one of my typical patterns that I like where it's the first pullback here, right? First pullback, second pullback, and then the third one obviously fails. The third attempt fails because that's how these things fail. This is part of this pattern right here, so I can skip that from now. First pullback, that's where all the people have that good initial entry. The second pullback, that's where the first chasers come in. The third pullback is where all the latecomers come in, the people who want to chase the chasers, and then that's why it fails. So don't ever buy the third pullback. I'm pretty sure I've explained this to you already. This is very similar to the lower high, what does that even say? Double top, double top. Lower high / double top. This is very much the same. Double top, right? And this is a perfect shorting pattern because there's a high, there's a lower high. If people were ballsy enough to trade something like this and short it because it's at the pennies, which I would not ever do that because, like I said, because of the how much you actually have to put forward, this is kind of a nice fade. But yeah, this is 1, 2, 3 pullback. Going back to my pattern, which is the ABC pattern, we have A, we have B here, right? We have, here's the top here, C is right here, because the whole thing to C, and then D is up here. Shit. D is right there when it hits that top, right? Now, this is where I can really talk about risk to reward. First of all, the thing you have to understand is the different support levels, right, prior to it developing. And we can, for that, we can get to Thinkorswim. So, when the trade is happening, how do you identify support and resistance levels? Okay, so that's easy to do. Say you see this runner moving up, right? Let's draw lines, because that's what we do as traders. So we have a line here of support, right? After it dips and it starts coming up, you can draw that line. I like drawing these lines because when I think the confirmed support, whenever it bounces, it creates a high, comes down, bounces off something, and then it breaks out past this high. Once it breaks out past this high, for 1, 2, 3 ticks, I know for sure that is support. If it goes up here and it's like right around here, and I say, oh yeah, that's support, that's not guaranteed because it can easily come back down and crack past that. So that's how I do it, but it's, you know, it's however you want to do it. But really, that is support. The dips are support. So here I have the dip, it comes up, breaks out. This is resistance, right? Because they've topped here 1, 2 times, and it breaks out past that. Now, probably should slowly go. Now we have a top, obvious top, and it goes, tries again, and it fails. This is, if it was a higher price stock, this would be an entry for me on a short, on a lower high. So now we have, let's see if I can zoom out. So now we have the double top and it starts fading, right? It makes, you can see this trend. Let me draw the trend. See this trend here. So it's just fading, high, high, lower high, and it just finally fades. Here it perks a little bit because it breaks that trend pattern where you can see this descending triangle. So it perks a little bit, and then it comes back down. This, like I said, here's a A, here's a B. So now, if you consider where your support and resistance levels are, let me redraw it for the purposes of us. Here is support. Here is the next support. Here is the main resistance. Here's the next resistance. Here's another resistance. And here's another resistance. So many, many lines, right? I know it's a lot of freaking lines, but really all these lines don't really mean anything other than this one here. Okay? So this is what you have to do in order to enter a stock like this. You have to consider, where did it hold support? So it broke out, came back down, and it held the support here. Now it came back down, and now it's holding the support all around here, right? Then we get to my $10 or my 10 o'clock p.m., which is 1 o'clock p.m. sweet spot that I preach all the time in my videos. And not my videos, but some of my videos, and also most of my Instagram account, my Instagram posts. Here, right at 10 o'clock, pretty much, 9:59, 10 o'clock, we have this perking volume. That's, of course, going to be, I'll be watching this. If this is holding around support here throughout the entire day, and it looks like it's kind of going sideways, I will watch the stock like a hawk and wait for a perk like this, where it starts perking on good volume. Now it starts making higher highs, right? I typically would buy around here, or the dip after that first pullback, risking off of this low. So if you risk off of this low, which is where it's been holding the entire day, you buy at 8, you're risking off 7. This is a big risk, mind you, because it's a lower price stock, so it's a lot more volatile. But here's your risk versus your initial reward. This line here is because it's just indicating the C, right? That's the only reason why I have that line there. But your potential reward is all the way back up to D, right? I would not, like I said, I would not hold and hope that it's going to continue breaking out. I'm going to get the predictable part of the move, which is buying around here, selling before it breaks out, because I know there's going to be a lot of selling pressure. This is a nice gain for me. I am not going to hold and hope. Maybe I'll have a quarter size or 1/3 size or something like that. I'll be very small position when I see it, uptrending, or when I see it trying to break out. But this is just consider how much risk to reward there is. Let me draw circles just so you can really understand the magnitude of risk to reward. That's your risk. That's your reward. It's huge difference in risk to reward. Now, what you don't want to do is, say, for example, you missed it, right? You missed the dip also, and you keep watching it uptrending. Then you see the number, the letter C come in, where it's holding around here and it starts perking. Then you buy here at 9s. Your odds, yes, they're still high because it can still go up, but you need to consider potential risk reward again. If you want to really let this chart develop, say, if you're not good at risk management, you buy there, right, when it breaks past that high. You have 90 cents, but you're buying in the middle of a channel. This is the channel here. If you buy in the middle of the channel, your odds are pretty poor, because now it can go down as easily as it can go up. So that's why if you buy at the bottom of the channel, not only is your risk small, but also you're giving yourself breathing room for the thing to go all the way back up. I don't know if anyone saw that. I don't know. If you guys saw that, I'm definitely going to delete that. Type in yes if you saw that. I'm pretty sure I cropped it, so you should not be able to see that. Oh, man. Let's see. All right, she didn't see it. My wife just walked in naked. Oh, that's funny. I might have to turn off the camera while she's busy here. Oh man, yeah, that's funny. All right, yeah, I had to turn off that. I heard the door open. I'm like, oh no, I know what she's coming in for. All right, yeah, so I'll finish here. So here, your risk. Let's look at the risk reward now visually. I know you wouldn't manage your risk as much, but this is your risk. That's your reward. Not that great in terms of risk to reward management. Of course, you would cut it somewhere around here. So ideally, you would do it this and this, but you're still buying mid-range on the channel, and that's not an ideal setup. Buy at the bottom of the channel and risk low, knowing that your odds that it'll retrace because the showing strength is high. Yeah, that's how the ABCD pattern should ideally be played. So I hope that answered your question. I already talked about first pullback. Afternoon high of day breakout is pretty much this right here. Here's the afternoon. It breaks out past the morning high or in the afternoon, and it continues high. Another one is NLNK, although a little bit more choppy. Still an afternoon high of day breakout. Actually, that's not good. Good one. Let's see if I can find another one. There you go. Here's a cleaner one. Man, good. Congrats to all longs on this one, man. All these junk companies are moving up. A up here, B up here, dips again, holds it, and then on the end of the day, kind of, well, aftermarket, it breaks out. Let's see if it actually did it. Almost broke out there, but you can see it now. It's gapping up. This is a very strong pattern, guys. It's a gimme pattern, especially for entries on these stocks. So looking for a clean one here. This is an example of a failed afternoon high day breakout, where it runs up, right? One pullback, two pullback, three pullback, fades, double top, comes back up, holds this support around this area here, spikes up, but it spikes up and it's already trying to break out around 10 o'clock. I don't want these stocks to break out around 10 o'clock. They need to be uptrending around 10 o'clock, showing strength, but if they're breaking out around 10 o'clock, that is not a buy for me, because that is typically going to have weak volume, and it's not going to be powerful enough to break past a morning high. So here's a failed breakout, then it comes up, failed breakout. And it's just not something you want to go over. But if this was never in here, this is another example. Right here. Here's a good example. Yeah. Line. Line here, right? Morning high, fades, comes back up, starts showing strength. Here, 10 o'clock to 10:30 to 10:45. This whole area starts seeing strength. Buy somewhere around here where it starts showing strength. Dips, holds under the breakout. Once it starts breaking out, this is a powerful buy right here. And it just continues uptrending the entire time. Once again, ABCD breakout, but kind of a little bit more uglier because it's a lot of resistance over here. Midday fade. Oh, yeah, midday fade. I like these. One of these guys. And of course, I'm not going to trade something that doesn't have these chart patterns. I only trade chart patterns with these sets of movements. I can only find one. Dear God. No, they can't see you. So I definitely turned it off. Yeah. I want to make sure, though, because some of you perverts out there. Some of you perverts out there trying to look my wife. All right. Let's see if we can look at it. Midday fade. Here we go. I like this midday fade because that's what we're going over, right? Midday fade. Yeah, here we go. Where, actually, no, that would be part of... Yeah, here's a midday fade, an example of it. Very liquid. God, I can't find one. Here's another afternoon high day breakout level there, right around 11 o'clock. 10 o'clock starts showing strength, 11 o'clock breaks out. God. Here's the midday fade in a much cleaner form. So we go here, midday around 10 o'clock, it fades. So instead of showing strength around midday, it crashes around midday. That's something I like. So it's just the opposite. And that's pretty much what these chart patterns is. If you're long biased, you look for these type of chart patterns that are going upways. And if you're short biased, you look for these chart patterns that go down, right? Midday perk, I've already explained that. That midday perk is part of the ABCD chart pattern, where around 10 o'clock, it starts gearing up. Right around here, where it starts gearing up around 10 o'clock, this is a midday perk. With volume, of course. It needs to have volume. Afternoon fade, I just went over that. That is Where to go? ALDX, their support. This support is kind of ugly, but it spikes up. It kind of goes sideways the entire time. Look like it's getting weak. Here's the support level, and it just cracks that support level. I do like that. Sideways price action in the afternoon. And that's and now that I mentioned that, this is another reason why for the afternoon high day breakouts, let's go to the personal top percent gainers. That's why this chart pattern, this would not be a buy until it does that. Once it does this, then it's a potential buy, right? When it dips and the dip holds there and it starts uptrending, that is a definite buy for me. The reason why I wouldn't buy it there, good thing I remember this, is because this is this exact chart pattern where the midday perk, or actually not the midday perk, but the afternoon fade where it's going sideways, right? Spike, 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 sideways, and it's holding around the support level. It can easily crash. If someone panics, it can easily crash below the support level and crash all the way down to this support level and probably have a bounce. But still, you risk this crashing and you getting stopped out immediately. Why not instead just let it perk up a little bit, right? Once you start seeing volume coming in, or on a dip, and the dip holds, that's when you enter. And you can risk off this, because then you know that the momentum's starting to go up. Another reason why people buy on C, and bring out pain again, it goes up, comes down. Like up, down, up, down. Up, let me try better. Up, down, right? So the reason why people wait for C, because what if you see this midday perk? This right here is around 10 o'clock, which is 1 p.m. Eastern, right? So 1 p.m. Eastern. If they see this 1 p.m. Eastern strength and it dips down, and say you go long here, the dangers of this is what if this is once again part of the trend, right? What if short sellers are just adding to their shares along this, where they add shares here, they see it perking again, so they add shares again, and it just continues crashing. That's the worry about this, and that's why instead what you want to look for is something that comes up, comes down, and like it kind of curls upwards, right? Higher low, higher low, higher low. That's what you want to see because that's a trend reversal. Once short sellers see this, where it makes a higher high, they're going to start covering their shares because the momentum is shifting. And that's why this pattern works so well. Because they're taking their profits from here to there, and they're covering around here. And that causes this buying pressure, and then longs get into the stock. So watch out for that, and that's why the same thing applies to something like this. What if this, once again, is part of the trend? Remove that. There you go. What if this is all part of the trend? However, you can see this. This is what causes the perk. But once again, here's a high, lower high, lower high, lower high. But as soon as it makes a bigger high and it breaks out past this, volume comes in. And then it for sure starts really gearing up. And this is where the real volume comes in. Because people know that the trend has officially changed. That's why this pattern works. That's the psychology behind it. Midday breakout fake outs. That was part of, I think it was ITIS. I got ITIS. Midday fade breakout right here. Low volume, midday around 10. It should not be breaking out around 10. It should be gearing up. So it should be like right around here, around 10. And then ideally you want this breakout to happen. This is not good. That is not a pattern you want to get into. Head and shoulders. Head and shoulders. Which one made this? I remember one of these guys made it. Ah, right. Here's an easy head and shoulders. Move all drawings. Right here. Whoop. Head and shoulders. We got a shoulder, head, shoulder, crash, bounces, retest that resistance there, which was support, and it crashes again because it can't break that. It cannot break past that support. The reason why this works so well, once again, and by the way, here's another intraday chart pattern, which is the sending kind of like symmetrical triangle, right? Symmetrical triangle, breakout, pullback, breakout, because it's testing that breakout there, pullback, comes up, high, another high, lower high. This is a typical short pattern, shorting onto lower highs. Short comes up, comes to that resistance level. They add their position there, and it continues fading. Classic short pattern. And that's why you don't stay long on this pattern. And even though it's a head and shoulders, you can really just think about it as a lower high. So there's that. As soon as it cracks it, it's definitely short. You could be adding here, but what if it holds and it starts going against you? That's why you follow the proper patterns. But this is a head and shoulders. Head and shoulders can also be seen on daily charts. It's just a recognizable chart pattern. Questions? Let's see if there are any questions. What makes a difference? What makes support ugly? Do I cut losses quickly or intelligently? It's a mixture of both. And the way it works is it depends how clean the support level is or the resistance level is. Like right here, and what makes support ugly? If there's a support, where is it? Is it itis? Right? Say there is this resistance here, and same thing applies to support, okay? There's this resistance here, and that's what I think what resistance is, right? And then later on in the day, it starts gearing up, and it perks past it, and it fakes out. I know it's gonna fake out because it's trying to break out in the middle of the day, right? That's ugly because that support is now up here, or that resistance is now up here. I don't like that. And then it tries to break out again, and then it has resistance up there. So now that's ugly because it's not a clean breakout. And same thing applies to support. It's just in reverse. The more it holds support perfectly, the better it will be in terms of a short, or for if it starts perking up, right? So paint again, paint. So say it goes up, comes down. Midday comes in, it starts gearing up, comes down because it doesn't break it. It starts coming up, then comes down. That is ugly because I ideally want it to be like this, where it comes up, comes down, and gears up, and here in the afternoon. And it's just a one shot, one kill type of thing, right? Here, what causes this is that, first of all, there's bag holders here, and then when they see that they can break even in the middle of the day, they're selling here. But then there's a bunch of people also buying here because they don't know the rule about the midday rule. So now we have more bag holders. So imagine the bag holders that didn't sell here, and they also didn't sell here. So now you have 2 times the bag holders. Then it tries to perk again. So those 2 times bag holders all definitely sell here. You know, it's like fool me once, shame on me. Fool me twice, shame on you. Fool me 3 times, you know, I'm a dumbass. That's kind of the concept here. And no one wants to be the dumbass, so they're going to sell right here. And that's what causes these fake outs, especially when it has a midday perk. And it's not going to let the breakout actually work properly. So when you have a resistance that is ugly and it's not straight across, and you have it coming down here, you have to understand that trend afterwards. And then it gets messy. For the you know, support side, it comes down, it comes up, comes down, holds that, right? Comes up, comes down, but then it kind of breaks and then comes up again. For you, or for most people, that will be a reason to sell because it's making lower loads. But what if it does this and it continues doing this, right? And it's just kind of holding there, but then it starts uptrending. That's ugly. Actually, that down, and it just barely squeezes underneath it, right? I don't like where it sometimes fakes out, or when it has like a candle that does this, where it's a candle and then the wick that goes all the way down, and here's the support level. I hate those because that's just stop losses getting out, and I don't want to be panicked onto trying to sell into that. So you just have to watch out for supports and resistances that are not clean. The cleaner they are, the better they are, because dumb people can identify them. And the more dumb people can identify these support and resistance levels, the bigger audience you'll have, because it's a gimme play. You want gimme plays. Keep it simple, stupid, right? So I'm pretty sure that, oh, and the difference between quickly is exactly that what I was talking about, where it broke past support, you know, the line of support, and then because it broke support by like 1 cent, you immediately sell. or like maybe 3 cents, you immediately sell. That is cutting losses, cutting losses a little bit too quickly, but also quickly because the trend is not holding, and that's why I don't like things that are choppy. Choppy means that they're they're not clean. Um, Intelligently would be what Tim Grittani shows on his DVDs, where this is a good example actually. Where, all right, so he says, all right, this is support. If it cracks, if I buy here on this breakout and it cracks, it comes back down and it hits the support and cracks below support, I'm out because it obviously cracked that. That's also part of intelligently. But say he buys here around this red and it soars past that. So now he's risking off of this. Now it goes up, goes up, goes up, goes up, comes down, comes up, comes down, comes up. And then he sees this type of action, right? He's going to say, all right, well, my risk is now here because it held support here. Well, what happens? It comes back down and then hits a stop right there. And you're out. You're out for a very decent profit, of course. Well, you're out. But in reality, the trend was higher, right? Another thing that where it intelligently applies is, let's say you see it hold support here, right? So you wait for the next dip. The next big dip is what I'm saying. So it's uptrending, no big dip. Comes down, you see this dip here. Then it comes up, then it comes down, and finally breaks it, right? What people would normally do is if they see this and it starts coming down, if they're cutting the losses quickly, they're going to cut it as soon as they see that it is going against them. So they'll sell here for a small profit. And that keeps their stats nice and pretty. Versus if you continue holding the trend, then it will continue up. You're basically holding for higher lows, and as long as those higher lows maintain, you are in the position. So with paint, if it goes up, comes down. Goes up, comes down, goes up, comes down, goes up, comes down. And here it looks like it's getting weak, goes up, comes down. As soon as it cracks that, you're out. Or say comes up, comes down, comes up, comes down, comes up, comes down. As soon as it cracks that, you're out, even though you're long here, right? Most people, if they cut their losses quickly, if it comes up, if they are long here, it comes up and then comes back down, they get out for break even. That's what cutting losses quickly is, because it's not going in their favor. Intelligently means that you're just giving it breathing room, enough breathing room where you're not risking too much, but you're also letting it have the opportunity to actually do what it's meant to do as a chart pattern. And the more familiar you are with your chart patterns, the more you're comfortable with actually letting it breathe a little bit. I hope that answered your 3 questions. Head and shoulders. Here's an example of head and shoulders, but it's just sideways. It doesn't have to be perfect. It doesn't have to be vertical. It can be kind of slanted, but as long as it makes a high and then a lower high, it's still short. That's why you don't want to be long in that. Morning panic. An example of a morning panic would be ALDX maybe. Right here. No, not that. HYDN. Right here, where it tries to here and has a fake out. It's not doing what it's supposed to do, right? Which is continuing to uptrend. So instead, it just crashes. Ideally, you want it to crash, and I'll go over that pattern later. But this is a morning panic. This is something you don't want to do. But the only reason why this happens is because volume in the morning is weak. If volume in the morning is weak in comparison to the previous day, it likely will fail. Another reason why it fails is because, say, if the chart pattern, say, what is it on this sucker here, where this chart pattern is an ABC chart pattern, and because it's holding that breakout level there, it ideally should gap up, right? Because it's holding support. But what happens is because here you go, we go sideways throughout the day, and it didn't do crap, and it's actually going negative on the day, it's going to have a small morning panic because people are going to cut their losses, right? They're going to cut their losses as soon as they possibly can. And that's what causes that, especially if, let's see, here's a small morning panic. It's very choppy. That's because there's a lot of support around there. But that's what a morning panic does. And the further away the price action is from the morning panic or from the morning, the better the morning panic will be. Um, so like something like this, because it's so overextended, if there wasn't dips like this and it morning panic from here all the way to the bottom, it can crash way down here. So you have to consider support. And that's where the next one comes in, where morning dip buy on panic on support, right? So say, for example, this is a bad example. Here, we see the support set by the previous day, right around here. Comes up, fails to spike, comes down, bounces off that. Very weak bounce, so you don't want to buy on that unless, like I said, it's a pump and dump and it's sheer panic. But it's support, and it holds support, and then it cracks it and it continues going down. Well, this is kind of the morning panics that I like to see if it was more dramatic. But this is what happens when it probably hit resistance here. I don't know what the fuck why I panicked, to be honest. It's just low price stock. But yeah, these things are just something you have to recognize. And when volume is weak, or when you see a lot of selling pressure on level 2, that's not something you want to be long on. And that's why it's not. That's more of an advanced strategy. First red day. This one is easy. God, if I can find a better one. A cleaner one. I actually can't. Oh, maybe this one. No. And fuck it. I can't find it, and I'm not gonna look through all my charts to do it. But just to quickly go over that. First red days, I like it whenever, especially on pumps, this works really well, where it kind of looks weak at the open and then just panics and it falls off a cliff. Happens a lot with pumps. If I can find a better pump where this happened. God, I can't remember. I know. I can't remember a good pump where this happened. But basically, we're almost done here. Basically what happens is that imagine a pump that just goes up like this and it finally has a crash, right? What happens on that crash day is typically it will look like it's getting weak and all of a sudden it crashes. And this happens in the morning within the first like 20 minutes. And then it crashes, and once it crashes, it will continue going down, right? Probably have a fake out and another fake out. And it'll start making lows and it'll bounce. That's because down here, all the shorts are covering, all the big shorts are covering. And that's a lot of buying pressure. I can't even spell buy. Because there's a lot of buying pressure there, people who are also paying attention to level 2 will also buy. And that will cause the price to raise up, right? The less of an opportunity is given to buyers to enter on, say, on this fake out or this fake out, the better it will bounce, the higher it will bounce. So say, for example, something just falls straight off a cliff and there's no bounce, and I've seen this before. I forget what chart pattern it was or what chart it was. And then it finally bounces a little bit, and it says it's ideally next to technical support from like a previous breakout. This thing can really shoot up, and then it'll fade out. You know, I've seen something go like way up here, and then it will fade again at the course of the day. Right? It'll just do this type of thing, and that's because shorts are piling into their positions all around here. And whenever they have, because there's no, like, it's all red marks, as soon as they see the first green tick, they'll all buy the cover all at the same time, and they'll trample over each other. And because they're all trying to buy in a cover here and they're trampling over each other, this causes this massive buying pressure that way. And then after a while, all the longs that are finally happy with their positions, they're going to sell their longs as soon as it looks weak, right? And because this now looks weak, and short sellers are like, oh wow, this is the second time to short sell, I'm going to short sell around here risking off of that. So my risk is that the high of the day. And I think I can make, my risk is that much, but my potential reward is 2 times that. Good risk to reward. Awesome. And it's a predictable pattern, so I'm going to short it. And because typically these first big ass green days have a second red day, they will continue fading the next day. And they continue to make profits. So that's why bounces work the way they do. And you have to understand that. And you know, it's a number 4, number 5, number 6, and then a 7. This is within a day, but the chart pattern still works, even though it's just a day. But this is typical of a stock. Let me actually look at the Instagram real fast. I know I got some of these. So you know I'm not bullshitting you. Oh look, ABCD chart pattern. Oh, it's just the one I was looking at. LT, nice to see LTSC stocks. Got it. Got what they want. Blah, blah. Nice breakout today. Cool. Let's look at my guys. Where is a pump? More. All the way down. Oh, here we go. So here we go. We have that panic. It has a bunch of fake out bounces. Has this this top here. It looks weak. It's around the 730 to 8, and it has this big bounce. The rest of the day it will fade. More often than not, it will fade. I would say 70% of the time it will continue fading, which is why shorts pile on there, and that's why long sell also midday. That's just how the pattern works, and I already explained the psychology to you. So hopefully that helps you understand it more. Level 2 on Thinkorswim. Yeah, I'll show you right now. Percent gainers. All right, here we go. Let's go. Oh, I can't go back in time. Son of a bitch. What was hot? NONK. I'm just gonna play back one of these stocks. 9-7. All right, so it's one of the level 2s. So this is how level 2 looks. It's not pretty at all. It takes a while. It definitely takes a while to get used to. Definitely takes a while to get used to. But here, basically, the way you look at it is that the brightest colors are the ones that are the current price. The ones below that are not the current price. So right now, you can see there's about 4 sellers. Now there's a lot of sellers and only 2 buyers. And you can just see that just by looking at the brightness of it. And if you look at that, you can almost tell what the stock is trying to do with your peripheral vision. And you can pretty much do this with any colorful ones also. But you can tell what it wants to do with your peripheral vision because it's bright it's really bright when there's too many buy or sell orders stacked, and it won't be bright at all if it's a very small amount of buyers or sellers. And now that we're here just to finish this. One of the things that I want to really touch up on is that 10 o'clock thing I talk about so much. Check this price action out on NOLK. Yes, it broke out midday, which is one of the few times it ever does that. This doesn't happen all the time. But I want you to look at level 2 whenever it has that perk at 10, 10:30, 10:45, whenever it does. So fast forward. Let's see if we can see a big ass buyer here. So you can see it. So 11-10s are stacking, 11-11s, so we're uptaking 11-12s, 11-14s, and it's about to make a higher high above that there. Once it makes a higher high above that, it needs to make a higher high above that, right? And then we can start really seeing a push. 11-13s, 15s are selling because of obviously 15 is that resistance there. So it's testing. Not only that, but we see that it's slightly uptrending, right? So we have that gearing action that I'll talk about Somewhere. Gearing. Gearing applies to red and green also an ascending triangle, right? This is gearing action here. This is also learned off the Foo's 4. You can see that eventually it'll have a climax, maybe about 10, 15 minutes. And that's what I want to look for. If it breaks out, then this is definitely a trend reversal, and then it'll start uptrending. Just keep looking at the level 2 1110s, because now it's around a key level of 1116. I only look at level 2 when it's around key levels. I don't stare at it all day, or else I'll lose my mind. Even if that's if I have the luxury to look at it every day. Come on, 10:36 already. Should be breaking out. Whoa, okay, too fast. All right. Oh man, that was too fast. So let's look at it. Let's see how quickly it stacks up. 704, 76, 7. No, like you can see 11, 12s is where the sellers are at. 15, 20, it just rips right through everything. 24s, 24 stacking up, 28s, 39s. It just ripped because look, there's no sellers. There's no sellers until 1160s. It's just eating through everybody. And look at this buy. And this is how this type of price action looks, and this is the type of price action that I want to see around 10:30. 10 o'clock, which is of course 1 p.m., 1:30 Eastern. So yeah, very, very large volume, of course. That is followed by a very, very, very nice breakout. So anyway, that's supplemental material. Whenever first red day, green to red, that just means whenever a stock was positive on the day and then goes negative on the day. That is especially on a overextended stock, whenever it goes red on the day the first time, say like, what is it? Like ALDX. ALDX is a good example. It was positive here, it went negative. It's such a huge momentum shift that it will give longs the first opportunity to sell, and short sellers the first time for them to get into their position. And because there's that massive selling pressure between the longs and also the short sellers, it works. That's what green to red is. Red to green is the exact opposite. Say if there is something that's going up, 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 kind of like this, where you see it going up, up, up. Or right here. Kind of did. But let's see if I can explain it better on paint. On paint, it's going, goes up, comes up, kind of sideways, breaks out over the afternoon high of day, goes up, and comes down, right? Then the market closes. Market opens. It kind of uptrended here. Then it goes red. Here's the previous day's close. It has a morning panic. But then here's support. It bounces off support. It starts gearing up. And here's a close. It breaks out. That is red to green. That is a huge momentum shift because it's basically telling traders, hey, this thing could still fucking go up. That's all that means. So if you see something that has good momentum and all of a sudden it's red on the day, don't just immediately take it off your watch list. If you're not short biased, keep it on your watch list in case it starts gearing up towards the previous close, and it can potentially have a big momentum shift past the previous close, and it'll spike high. That's what that chart pattern is. Oh, almost done. Red to green. Gearing action, I already explained that. It's basically an extending triangle. First green day. Right here, good example. If we go to the 5-minute chart, we go here. You see, here's a green day, red day. Here's that midday bounce that I talk about after the crash. Midday bounce, it fades, Whoa. Fades, comes down, but then it spikes up, right? Obviously, here is resistance, so it's not going to break past that. But then we have this gearing action that I like so much, right? kind of like that. And there's also another resistance there, level there. We have this gearing action at lay of day showing strength for the stock. Ideally, I wanted to break out within the same day, showing longs, hey, this is something that's good overnight. But because it has a gearing action throughout the entire day and never showed weakness, this gapped up. Because of this action here on the first green day, this is where I want to go long. Something like around here, this dip here, or this dip here, and risk off of this. So that's how first green day is on this. That's why the intraday chart pattern, first green day spikes, and then it has an ABCD chart pattern within the first green day. Symmetrical triangle. I'm sure I've gone through this before. I don't know which stock this is in. I don't know. I saw it here. Kind of a symmetrical triangle, right? So here we have this guy and this guy. Ideally, you want it to break past, but this is not always a science. These things can also break down. The only thing that this signals is that this thing is about to have a momentum shift either up or either down. Only because it has a symmetrical triangle, do not think that, oh, this thing's going to go up, so I'm going to buy like right here in hopes that it's going to break, knowing that it's going to break up. There's no guarantee. You wait for the reaction after it's at the climax. If it fades, you don't go long. If it breaks out, then yes, you can consider long, but understand your risk. And here's another form of symmetrical triangle. Right? ABCD chart patterns are almost always symmetrical triangles, which is why it brings so much audience into it, because not only are people that are watching ABCD chart patterns are looking for it, but also people that are looking for symmetrical triangles are looking at these ABCD chart patterns. Very similar to this guy here. Here's another symmetrical triangle, right? Climax pops, but in reality, this is A, B, C, right? A, B, C, and D. So they're both the same pattern within the same pattern. They're both the same but different. That makes sense. And like I said, you want to have chart patterns that are simple so people can understand them, so that you can have a wider audience. If it's too complicated, if you're using like RSI, Bollinger Bands, you're narrowing how many people you can have attracted to that stock. And that's not necessarily good in this game. And that's it. Oh my God, we're finally done. It's 9:51 my time. Jesus Christ, it's 12:51 for you, all you East Coasters. That's crazy. Well, I hope I did get enough info off of this video. There's a lot of info on this video that is good for you guys. Yeah, if you have any questions, please say them now. Because, yeah, this is the end of the video. After 2 hours later. Jesus Christ. That is a long time. Wife is already laying down. Give you guys 2 minutes for questions. If you passed out already, kudos on you. You guys are hard workers. You guys work your asses off until you fall asleep. I will also have a link for this document here on this video, showing all these chart patterns. But I pretty much given you everything I know that works. Now, which ones are you going to document on Excel file and track them? That's entirely up to you. The ones that I like best are obviously ABCD patterns. The afternoon high if they break out on large volume. I don't buy the front side of the move, so I don't buy first, second, third pullback, but I have had first pullback working well. Midday perk works well for me. Afternoon fade is, I don't really use that. First red day, I use that a lot. I don't use red to green or green to red. Gearing action, I kind of use it sometimes. First green day, I haven't used it in a while. For all these patterns, pump and dump, I try to trade them. I almost always miss them. Major daily breakout, I don't like how breakouts act in today's market. Gap fill, I definitely do trade those. Supernova, of course I trade them. Gap fade and push, I definitely trade that one. Earnings winner, yes. Buy on rumor, sell on news, I try to stay away from those. Former runner, nope. Major daily breakout double top, nope. Even though I know that most of the time they happen. Don't trade into Foos 4. Major OTC breakouts, I try to. I almost always miss them because the breakouts for some fucking reason happen at 6:45 in the morning my time. And I'm still trying to wake up at that time. First red day, if I can find shares to short, yes. First green day, I will definitely try to buy that as many times as I can, only if I'm prepared. Overextended runner, it's just an indicator. Overextended red to green to red, I don't do that. There's too much risk of it faking me out. And the symmetrical triangle, no, I don't think I've ever used that. I probably would buy the breakout, which is dumb of me because I'm chasing. Yeah, that's pretty much everything, guys. I mean, it's a lot of info. 2 hours of stuff, practically a freaking DVD of chart patterns. All for free. All for free. Well, it is 55 and there still is no question, so I guess you guys are, I've answered any question you guys have. Or you're still trying to digest it. But if you do have any questions, please leave it in the comments after this video has ended. I don't know when I'll do a webinar this long. Again, I'll probably do a video every now and then about pump that I played almost perfectly the other day, or a while ago. But if you guys have any recommendations for content, please let me know, so I can extend that favor to you guys to teach you guys, especially all you newbies who are still trying to find the edge in the market. I've given you all the different tools that I know of. None of them are the right way to do this. You need to figure out what type of trader you are in order to develop a strategy that best suits you, right? And that's by literally, I did it by trial and error, trading, and finding which pattern makes sense to me, and the ones that I was successful in, I continued doing exactly that pattern, and the ones that, even though they make sense to me, I still continued losing, I didn't trade it. In addition to that, I had my Excel sheets that showed the stats for those trades. So definitely consider all that. And please, if you're starting off, start off small. Don't go, big size. I know you guys are all trying to make money quick, but this is a marathon, not a sprint. You guys really need to educate yourselves first. At least do 6 months to a year of studying before you really try to dive in with real money. That's all I got for you guys. Until next time, guys, this is Mike with Daily Stock Fix. This is where you cue in the awesome music in the background. Till next time, guys. Peace.